Both Bitcoin and Ethereum take out all-time highs as crypto market cap approaches $3 trillion. On-chain metrics remain bullish, showing peak hodl behavior and a spectacular recovery in mining. Options flows are dominated by call spread buying in December and January expiries to play the year-end rally. All this and more in this week's Crypto Insight. Okay, so crypto this week. That, we'd been saying that the consolidation that was happening in October, that pullback from making the new high, pulling back in a nice three-wave structure, we thought that was a complete ABC correction, which is typical of a fourth wave correction. So if that was a fourth wave correction in the impulse move that we've seen off the lows back in July, then we could kind of label this as a 1, 2, 3, 4, and now we're in the fifth wave higher. That's going to complete this impulsive move, okay? And again, we're probably going to head into year end. So if you look at the kind of size and shape of the wave one, maybe the up leg that we're going to get is similar in shape. So 30,000 to, 60 odd thousand would take us, we could go from this low of around 57 easily to around 80, 85,000, okay? So that would be a pretty nice symmetrical five-wave structure that would get us into a year-end target of something like 80K or above, basically, right? So that looks fairly realistic to me. I'm trying to be conservative. Like a lot of people are calling for way, way higher targets on Bitcoin, but I'm just trying to stick with what's realistic, and I'm happy to revise targets higher as we go. But for me, an 80K target by year-end is looking very comfortable, and it kind of lines up well with the kind of five-wave structure that we're kind of seeing happen. So that's kind of my thoughts on Bitcoin and its recent sort of technicals and how that price is evolving. So obviously the strong performance lately that we had in crypto has taken the market cap just shy of $3 trillion, right? So pretty good news. Biden put out a stablecoin report last week, urging Congress to take action in terms of regulating the space, talking about, treating issuers of stablecoins more like banks, and requiring various types of conditions as banks need to. That doesn't sound particularly positive. However, the kind of endorsement of the space is the more positive way to look at it, basically, right? So still, I think the crypto market's jury's still out on whether it was net positive or negative, but it's legitimizing crypto. Let's call it that. What else have we had? We had the New York mayor, very crypto friendly, saying that he thinks it should be taught in schools, saying that he wants to take his next paycheck in Bitcoin. It's not bad. And then Houston's firefighters pension fund recently bought like 25 million in Bitcoin and Ethereum, right? And they said it was due to the low correlation that it has to other asset classes, right? So showing you that big pension funds are out there using it as a legitimate asset class for diversification versus other assets, which is, one of the reasons why we are getting more and more institutional adoption. Right now, another thing I found quite interesting was that you had a couple of congressmen from both sides, Democrat and Republican, calling for Gensler to approve a spot, or asking why they're not approving a spot ETF. And if you look at the performance so far of the futures ETF, I mean, it's only been alive a month, right? And you can see here that it's already underperforming. So the ETF, the Bitcoin futures ETF, is in orange. The Bitcoin underlying price, this is since inception of the ETF, right? The underlying price is in green, and then the Grayscale Trust, which obviously has got a premium that flies around. So that's not necessarily that reflective of what the underlying is doing all the time. But these are the relative performances. So you can see that it's already underperformed by 2% since inception, right? And it's only been alive for like less than a month. So that is your carry cost being built in to owning that ETF, right? So clearly a disgusting retail product that is going to have embedded costs like USO, like VXX, all these products that use futures to replicate exposure, and those futures experience a roll down cost. Same story here, right? So, Gensler needs to stop making excuses that's better to protect the investor, when really you're just eating them alive in terms of performance. Okay. And then what else? The Ethereum cross rate, that obviously I always keep a track on. So obviously Ethereum, pretty solid performance in Ethereum, charging higher, approaching 5,000, which is a bit of a psychological target there. But the cross rate, I think, is a bit more informative. If we look at that cross rate, after breaking that downtrend, it had a nice run, pulling back to the average level here. I think it's probably got at least 13% upside that gets us back to this 0.08. And that would be, if you look at those numbers and say, all right, by year end, this is going to be at 0.08, Bitcoin's going to be at 80K, what target would that put on for Ethereum? Well, that gets Ethereum to about 6,400, right? Which is pretty achievable, I think, right? If Bitcoin can get to 80K and that cross rate can trend towards 0.08, then that's what we're looking at in Ethereum, basically, right? So that would be my achievable target for Ethereum, which again, I'm happy to revise higher as and when we see the price action. Okay. So that's kind of what I'm thinking on the technicals and the news flow in crypto. Yeah. So now I've got some cool charts now that are from Genesis Volatility, right? Which are my new friends that I'm going to basically use their analytics going forward. So they've got a really, really rich data set, loads of interesting charts on their platform. So I'm going to be showcasing a lot of those sort of going forward. This is the realized vol. So this looks at the sort of 1 month or the short end of the curve in terms of implied. Looks at 1 month history, what that historic implied has done in the pink, and then we've got the realized vol and where that's tracking. So you can see, that's kind of widening out that spread, right? You've got the short dated implied tracking at around 80, and you've got the realized at around 50. Now the realized is nice, it's this Parkinson's historic vol, and what that actually does in its calculations, it factors in highs and lows of price rather than just close to close, which isn't really a particularly great measure, because if there's a lot of intraday chop in a market, then it wouldn't reflect that, whereas this Parkinson number actually does. Yeah. But anyway, the moral of that chart is just basically saying realized implied, still not great, pretty difficult to carry gamma at the moment in this environment. So, there's about 30 vols of negative carry if you're going to be long short dated volatility. Okay. Another really nice way of observing that is via this volatility cone, right? So this volatility cone, what does that show us? It shows where this shows us realized vol and where it is in terms of where it would normally be. So it kind of shows us that you've got various time windows. 1 day kind of doesn't mean a lot, right? So 7 day, 14 day, 30 day, 90 day, etc. And if we look back over the last year, what has been the range of realized volatility, right? So the maximum realized has been on this top pink line. The minimum has been the bottom pink line. The black lines are your 25 and 75 percentile. The white line is the median, and the blue is where we are now. So you can see that the blue on the 7 day, 14 day, 30 day window, and even 90 day window is pretty low, right? Pretty damn close to the low end, which is the minimum realized we've seen over the last year. Right. And then when you go to the 180 day window, that is showing you it's actually at the median. So that obviously includes a bit more, that's 6 months of history. So that includes some of that summer volatility that we saw, that some of those crazy crashes that we saw. So that's why that number is a bit more in the mid range. But you can see shorter dated windows realize is pretty much hugging close to the lows that we've seen all year. All right. So not a great sort of result for people who are long gamma and kind of paying time decay in crypto land right now. Okay. Now that obviously would explain why the term structure shape should be in contango, right? What is contango? Contango is when you have the front end trading lower and the back end trading higher, right? The front end is what contains gamma. Gamma is your exposure to realized vol, as guys who've done my courses will know. You've got over the last week, what have you had? You've had the blue is last week, the pink is today. Obviously, these colors are a bit different to what you're used to seeing. Front end's been getting hit, obviously losing around 5 vols. When I say front end, I mean really short days, 1 to 2 day stuff, which is pure gamma. Yeah. Then you've got the kind of 30 to 80 day window. That sort of 1 month to 3 month area has been relatively well supported, kind of grinding a little bit higher. And then you've got that long end part of the curve, 6 month and beyond, coming down a little bit, right? So you've had the long end Vega coming in, you've had the short end gamma coming in, and you've had that medium term stuff actually holding up okay. Yeah. That's how the term structure has evolved this week, right? What's been happening on skew? So I've highlighted a couple of key maturities in terms of skew here. So we've got the January in blue, and we've got the November options in pink. So you can see here you've had kind of cool skew about 5 vols over in January. That's kind of drifted down close to 0 and is now sitting at around 1 to 2 vols. So cool skew kind of coming off a little bit, but bouncing a little bit as we kind of approach these new all-time highs today. Now, if you look at the super short dated skew, like the November stuff, that was very much for puts middle of the week, got as much as 5 vols for puts, but reversed engines and went back towards calls as the market took out the highs and kind of is now threatening that 70K area. 70K area is probably a big psychological level, which if we break, then we're going to game on to accelerate to 80K. So people are probably piling into some short dated calls to play that. Yeah. So that's what kind of the skew moves in Bitcoin are showing us. If we look at the flows, like some of the big blocks that have gone up, you guys would have seen this chart before, as I've showcased it before, is the block sniffer. So this one is showing 67% skew towards calls in terms of the big blocks that have gone up. So more call activity. If we look at strikes, you know, what's been trading, well, you've got a bunch of white and gray bars here in December and January in that 75 and above, 75 to 95K in December, and the 100 above 100K to 100 and even 40K in January, right? So that's where there's a fair amount of activity going on in terms of calls. You know, it's a bit more mixed if you go closer to the money in terms of lots of different expiries and stuff. But if we go to that upside region above 80K, it's basically all Dec and Jan calls that are going up, right? In terms of the blocks. I mean, also 50% of the blocks are call spreads, right? Which is a pretty decent chunk, right? So a lot of call spread activity going on, probably to the buy side, given like what the implieds are doing in that area, suggests that Vega's probably been bought week on week because that part of the curve is held up where every other part is collapsing, kind of indicating to you that you've got the activity in that part, you've got the vol holding up in that maturity. We're probably seeing call spread buyers in Dec and Jan, basically, is what it's telling you. Yeah. And then the only other thing I would sort of say on Ethereum vol and how it differs, well, you've had obviously you've got a 20 vol differential between Ethereum and Bitcoin, which is pretty standard. We've seen that for a while. So the carry is still pretty bad in Ethereum. It's negative carry of around 20 vols as well. And, you know, those realized are near the lows of the range, similar to the volatility cone you saw in Bitcoin. The term structure in Ethereum is a bit steeper because there's obviously a higher demand for that March 22 area. As we've seen the flows into that space, we've seen the potential timing around an ETF or ETH 2.0 in Q1. Those are the type of things that are holding up that longer part of the curve. So you're going to get a steeper curve in Ethereum most likely. And then the only other interesting thing I saw in terms of ETH vol was what the skew's been up to. So again, you've got a couple of key maturities here. If we look at Jan and December, whereas the call skew was like 12 to 15 vols over at the start of the week, that has got annihilated down to, it got as low as 0 here. And then now it's bounced a bit, but it's still only about 5 vols. So call skew coming in quite a lot in Ethereum. And if we see here, the chart on the right-hand side, that's just January and what it's done week on week. 5%. Week on week, you can see that the strikes at the monies have dropped. All of that Jan vol has dropped, but the calls have dropped by more. right? The upside, the 8,000, 9,000, 10,000 areas dropped by significantly more. So cool skew coming in that January expiry and the December expiry, right? The March expiry probably holding a bit better, given that we know the street has got taken very short that from recent flows. But you're starting to see that Dec and Jan upside come in as it just looks very expensive and very stretched relative to realized, and the fact that it is going to have to decay away at some point, basically, right? So it just can't stay that elevated forever, as that premium is just not worth paying up for, basically. Okay. And that's basically it for crypto this week. Now, just want to check if hopefully a special guest has joined. Greg, you there, mate? My man. All right.
I'm here.
Greg's here, and Greg is the guy responsible for all these amazing charts that I've been showing you guys, right? So let me just stop share. And how's it going, Greg?
Good. Nice
yeah, so, everyone, say hi to Greg. This is the G-Vol guy. And Greg, what are you seeing? Anything, I don't know how much of my stuff you caught just now, but anything else you want to add, or anything you're seeing that people might find interesting?
Yeah, I'd love to maybe talk about some Ethereum vol if that's cool. Maybe I can share my screen if possible.
Yeah. Do that. Go for it.
All righty. Cool. All right. So as Imran noted earlier, we have some pretty high volatility premium compared to realized both in Bitcoin and Ethereum. And the Ethereum skew has been moving a lot. So there's kind of two concepts that we're seeing here on this right-hand chart. One is that short-dated skew is flipping back into positive territory, meaning that there's demand for calls again. But what's even more interesting is sort of this long-dated stuff rallied really hard about 15 days ago, and we could see a large premium to the calls, about 20 vol points for calls for 180 days out, or 10 for about 60 days out, which makes me really interested in sort of this March expiration cycle. Same thing here on the left-hand side, we have this at the money vol. So we could see that the term structure is really steep. So as 180s flips into 90 days, we lose about 10 points. As we flip in another 60 days, we lose, about 5 points, we lose another 5 points. As 60 flips into 30, we lose 10 points. And as 30 flips into, call it 10, we lose about 30 points or 20 points. So we're seeing kind of a huge decay or a roll down effect down the term structure, combined with sort of a skew roll down here from 180 days down to 90, down to 60. And lastly, you're paying the typical theta decay for just holding volatility. So the way that I like to structure a trade here is that I have a bias that Ethereum is going to keep going higher. We're sort of seeing this nice grindy type of chart formation, which is sort of what you'd expect in equity markets, that we're rallying in sort of a very controlled manner. And so this bodes really well for a crushing of implied volatility. So how do we play this in a way that isn't kind of reckless in terms of open-ended risk? So I think these butterflies for this March 2022 are really interesting. So the way that I would structure this is, I do think going into year end, as Imran already alluded to earlier, $6,400 Ethereum sort of makes a lot of sense. And now it's January 1st, ETH is worth $6,400. And I think the next kind of logical target after that is this $10,000 price point. $10,000 has a big psychological number to it, but it also has sort of this market cap value of $1 trillion, which is significant on its own. So taking all these views combined together, and especially with the vol space, what I'd like to do is structure a trade where I basically buy this $8,000 call. I pay $709 for it. I sell two $10,000 calls, get paid $1,000. So now I've net collected $300, and then I buy this $12,000 call for $368. So I pay out $368. So I'm all in for about $80. And so this is kind of this classic butterfly structure. And it's an 8 by 10,000 by 12,000 structure. So the strike width is about $2,000, and I paid $80 for this position. So the max profit is 25 times the premium that I paid. Obviously, we're not aiming to make 25 times, but the idea here is that as time goes by, the belly of this fly, these $10,000 calls, are going to get crushed in multiple ways. You're going to have the skew convergence that we alluded to earlier, back to this chart, where long dated skew comes down and starts reaching toward, and it looks like long dated skew can lose another 5 points. So you kind of have these calls losing 5 points because of the skew function. And then you have this roll down the term structure. And so that, as time goes by, your vol decays as well. And then lastly, the theory that ETH continues to rally, what all this does combined together is that as this belly and this far out wing decay, you almost have this $8,000 call profile. We're converging to the $8,000 call outright profile. And so as ETH rallies, we're looking to buy this for $80 and maybe sell it for $300. So we're looking at kind of a 1 to 3, 1 to 4 risk reward on this type of trade structure, but it incorporates all these biases in sort of a nice logical fashion. So that's kind of what I'm seeing in the market. I mean, I'm a big ETH guy, so this is typically the market that I look at. And that's kind of the 2 cents that I had to add to this.
Brilliant. Cheers, Greg. Thanks for that. And thanks for coming on, saying hi to the guys.
Absolutely. Thanks.
No probs. All right. So that's kind of it from us. So who wants to have a chat and tell us what's going on, what you've been up to, any questions on anything we've covered? Greg, feel free to stay, feel free to go, entirely up to you. All right. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.